Yes, good morning. I guess I can start with the introduction. Thank you, Shauna, for having us here today. We're really happy to be here, and we have a presentation for you today. I think it's been our 5th year coming to the WADE conference, so it's really nice to be back and see you all and talk with you. And so today we have a presentation for you, and I would like to do some introductions. I'm Ginny Waltman. I'm the audit manager for Team Tri-City, and also I'm a program manager for Conservation District. And I've worked with Shauna quite a bit the past few years, and also with some of you at your Conservation District. And then we have Megan McFarland. She's our subject matter expert with Conservation District, and she's also been around for about 5 years. And she is also an assistant audit manager on Team Port Orchard. And then we have Stacy Teller. She's our local government support manager, and she provides a lot of support to all of you on your financial statements, questions, things like that. So, and then we have Deborah. She is our expert with OPEB. I mean, she's the one you want to talk to about this. So we're really happy to have them here today with us too, to share some information about OPEB. So today we'll get started, and I wanted to let you know we kind of have a lot to cover in the 40 minutes. And so if you do have any questions, we'll save that for the end. And then if there's not enough time, you're more than happy to reach out to us through our email or the chat box, and we will definitely get back to you. So today, what we will be talking about is going over the prior year audit recommendations that we had this past year. So for fiscal year 2019 audit report, and we will also be talking about some new GASB 87 on leases. And then we'll talk about the COVID, and maybe you have some grants coming in or things like that, and how to report them, and give you some guidance on that. And then we also have some emerging information that's important for conservation districts to know about. We'll share that with you. Then, of course, we'll be talking about OPEB and explaining that more in detail, and maybe help to have a better understanding of OPEB and why it needs to be reported. So first we'll start off with recommendations. So for this last audit cycle, we had a total of 22 recommendations. Which that is all of you that received the audit this past year. And I want to say that's great. And out of these 22, they were all exit notes with the exception of one management letter. So I have to say that's outstanding. And thank you so much for all your efforts that you put into making sure you're complying with state laws and accounting for your resources. So just to give you a little bit more detail about what those recommendations included, there's a list here of the different areas that we had recommendations in. So as you can see, the accounting and financial reporting and procurement and disbursements were the areas where we found most of our recommendations. And then also areas with interlocal agreements, electronic fund transfers. That's kind of been a big focus, making sure that those funds are legit, and people are authorizing those, and making sure if you receive an email for anything that's being requested to be changed, that it comes from a legit person. And then there were a couple on payroll and the Open Public Meetings Act and third-party receipting and financial conditions. So it's kind of spread out. But there were 4 top areas, and I just wanted to talk a little bit more in detail about those recommendations and things that you can do to address those in future audits. So just some reminders on the accounting and reporting. Every year, Stacy and her team, they put out the bars minimum updates that include all the accounting standard changes and updates. And so it's really important to take a look at the buyer's manual and make sure that there's things in there that might be new, that might apply to you, and implement those in your financial statements and in your notes and schedule. And you're always welcome to reach out to the LGS team if you have any questions about something. They're very good about helping and providing you guidance and assistance with that. The other thing is making sure when you're preparing your Schedule 16 or your Schedule 15, your federal schedule or your state schedule, that you're checking those grant agreements. Sometimes they're split, like part federal, part state. And so you want to make sure you're including those appropriately on both of those schedules. And sometimes it's kind of hard to tell, you know, well, how much is this and this? And so that's where we recommend that you reach out to the grantor and ask them to provide you with guidance on how exactly they should be split. And then keep a copy of that guidance. So when we come out to audit, we can see that this is the direction that they gave you, and we have something to follow. The other thing you want to do is making sure you're looking at the note template. So change when the accounting standards change. Sometimes there's new note disclosures, or the wording changes, or some of them go away. So make sure you're checking those and updating those. And then last, I provided a link, and I believe you'll receive a copy of this PowerPoint where you can go and look up the buyer's manual and see the updates that happen over the years and the current one. So some reminders on procurement. Their procurement changes every year, it seems like. They keep changing the limits, you know, it goes from 3,000 to 5,000, 10,000, or from 100,000 to 250,000. So they're always changing every year. And so it's really important to take a look at those RCWs and the federal requirements, and that your policies are in line with those requirements. And so that's something you want to check every year and make sure you're updating that. And the other thing is if you have a contract with somebody to perform some work for you, I mean, maybe it's a verbal contract, but you really want to have that in writing. So it lays out, this is what you're doing for us. This is how much we're paying you. This is when it will be done by. This is the period. So it's really important to have all that information included in your contract and making sure it's signed. That way you have something to fall back on in case something happens with the contract. And then the last reminder is if you do have federal procurement where you're using federal dollars to purchase a service or do a public works project, you want to make sure you're following the most restrictive requirement. So sometimes the federal requirement is more restrictive, and sometimes it might be the state law that's more restrictive, and sometimes it's your own policy. So whichever one is the most restrictive, that's the one you want to follow just for federal procurement. So interlocal agreement, again, very similar to your procurement contract, is making sure that you have a signed contract in place that includes the scope and what they're doing and how long it will be in the dollar amount. Again, you don't want to have an open-ended contract, you know, because anything could happen. You want to make sure you have something in writing that's specific, that you have something to fall back on in case something doesn't go right with the contract. And you want to make sure you're updating these. Sometimes they say, oh, it goes every year until somebody says we don't want it anymore. Or sometimes it has an ending date. And so you want to make sure you're keeping those updated and they're current. And then making sure that you're monitoring those contracts, especially if it's a contract where you're billing somebody, that you're billing them timely and you're getting the funds back, or if you need to pay them, that you're doing that timely. So be monitoring those agreements and making sure you're billing timely and being able to get your payment for the services you provided. And then the last part, disbursement, just a reminder on credit card policies, make sure that those are in line with your practices. Some of you might have some practices where it might just be a verbal, this is what we do, but it's not in writing. So when we come out to conduct an audit, we usually follow the policy. And so if there's no policy in place, we're not really sure what the requirement is or what we should be auditing to. And it's also helpful for you to have something in place, a policy as an internal control to make sure that they're purchasing the credit cards that meet your criteria. So having those credit card policies are important. There's also a state law that outlines what you need to have in your credit card policy, who will be responsible for it, what the credit limit is, how you turn in your receipts, what the reimbursement process is, who will review them. Sometimes there's approval levels depending on how much. So having that credit card policy is in place, is important to have in place. The other thing is sometimes you have reimbursements that might seem kind of unusual, like purchases for work gear or travel or some other kind of item that might be unique to conservation district. And so if that's the case, you want to make sure that you have a policy to address those items. So maybe something that's approved by the board that says this is for a district purpose and we do provide work gear because it's part of their job or something like that, and having a policy for that so you can show that it's allowable and it supports the district purpose. And then last thing is there are some meal purchases that you might have, and having the receipt's good and a detailed receipt is good, but you also need to include why are you having the meal? What's the purpose of the meal? How does it relate to the district and the business purpose? So you might want to include the names of the people that are attending the meal and why you're having the meal, the meeting. Maybe it's a special meeting for getting a grant or something like that. So you want to include that information with your meal purchases. And then electronic fund transfers, again, is a statewide theme, you know, not only for local and state governments, but also for us personally, you know, making sure that all the transactions are legit. So you want to make sure that transfers into other accounts, you know, there's that risk that maybe they're not legit or an outside source is acting as somebody you know, and it's not really them, and they're trying to ask for a transfer. So you really want to have a policy in place, like how you would address that. How will you make sure that any request you get to change anything is legit? You know, maybe a phone call, maybe it's in person, something like that. So having a policy in place is really important so you know the steps to take. And it's not only for vendors or payments, it also could be for payroll as well. And those a resource that I've included here about how to create a policy and put some internal controls in place to safeguard these types of transactions.
All right. Thank you, Jenny. So good morning, everyone. I want to spend just a little bit of time this morning talking about GASB 87 leases. The implementation of this GASB was one of many that was delayed. It was first set to be implemented for fiscal years ending June 30th, 2020, and is now effective for fiscal years ending June 30, 2022 and after. So while it still feels like it's a little ways off, we wanted to make sure to bring it to your attention. Make sure you know of the resources that are available on our website, because implementation of this GASB can be very time consuming depending on the amount and type of leasing activity you have. So it's important to note it does apply to new leases going forward, but it also applies retroactively to existing agreements that you have. There's also reporting and accounting requirements, whether you're either the lessor or the owner of the asset, or the lessee, the one that's using the asset. So one of the first steps in implementation of the GASB is to create an inventory of all your existing leases, contracts, and agreements. So that way you can begin to evaluate what qualifies for reporting and what doesn't. Keep in mind, not all leases are going to be called leases. It could be called a contract, but still meet GASB's definition of a lease. And also, not all leases are subject to accounting and reporting under GASB 87. Some of the more common exclusions that conservation districts may have are contracts that transfer ownership of the asset at the end of the lease, or capital lease, or possibly you might have a lease of biological assets such as timber, living plants, or living animals. But I think the most common exclusion that you might see are short-term leases. These short-term leases are they're leases that have a maximum possible term of 12 months or less, including any options to extend. So again, these are all excluded leases that are not subject to accounting under GASB 87. So as we go through the next couple of slides, I want to point out that the information in them are for entities that prepare cash basis financial statements. Our website does have guidance for GAAP financial accounting, but since all of the conservation districts prepare cash basis statements, we wanted to focus on that. So once you've identified all the applicable leases, for those where you are the lessee, again, the one using the assets, you're going to calculate the total amount of the future lease payments and report that as a lease liability on the Schedule 9 or the Schedule of Liabilities. For cash basis financial statements, you don't need to worry about calculating the present value of those future lease payments. You're just simply calculating the total amount of the future lease payments. Then as you make the lease payments, record the expenditure to BARS 591 to reduce the lease liability. For the leases where you are the lessor or the owner of the asset, when you receive the lease payments, you record them to a 340 revenue account, but that's only if leasing is the primary operation of that fund. And most likely for conservation districts, leasing is probably not going to be the primary operation of your fund. So in those cases, the lease revenue that you collect would be recorded to BARS account code 362. So as I said, very quick introduction to GASB 87. Again, we just want to make sure that you have the resources available, know where to go for additional information. Our office has put together a whole page of resources and information on our website, and that link is in the PowerPoint presentation. I think they'll get a PDF of that as well. It breaks down, that page breaks down the accounting and reporting requirements for both GAAP and cash basis entities. It includes more information on required note disclosures. It has frequently asked questions and links to the actual GASB and other resources. There's also a link to a video that Deborah Burleson put together that goes more in depth about the GASB and how to implement it. Also on our website is a page dedicated to COVID-19 guidance. SAO has put together a COVID-19 guidance toolkit of resources related to accounting and reporting, federal financial assistance, and some auditing guidance to help you stay in compliance with federal requirements related to COVID funding. The accounting and reporting resources includes direction on how to code COVID-19 expenses and stimulus payments using the different BARS account codes. It has a link to the subsequent event disclosure template to include in the notes to the financial statements. And it has more information from GASB about the effects of COVID-19 to accounting and financial reporting requirements. Under the federal financial assistance section, we've included links to Department of Commerce guidance on the Coronavirus Relief Fund, U.S. Department of Treasury, and then some additional resources if you're seeking or applying for federal funding. So, and lastly, the auditing guidance section focuses on tips and important information to consider if you're receiving federal funding to help ensure that you're staying in compliance with single federal audit requirements. So, and these are really just a few of the tools and resources available on that page. So I definitely encourage you to check it out, check out everything in that toolkit. And again, that's at sao.wa.gov/coronavirus. So moving on to a few some emerging information for you. We have a few new things to share. Recently, there's been some questions about the proper reporting of PREP, practice incentive payments, or PIP activity for conservation districts. So the State Auditor's Office performed an analysis to determine whether the conservation district's involvement in the PIP program should be reported as fiduciary activity. And based on our analysis, we found the districts do have administrative responsibilities related to the PIP program. And we concluded it did not meet the definition of fiduciary activity. So basically what this means, when a conservation district disperses the PIP loans, it should be reported to BAR's expenditure account code 553.10. And also very important to note, it should be reported on the Schedule 15, or the Schedule of Expenditures of State Financial Assistance. Then when the district receives reimbursement from the State Commission for those reimbursements would be reported as revenue to BAR's 334.03.30. So data sharing agreements. Recently, a bill was passed by the legislature that requires all local and state agencies to have a data sharing agreement in place before exchanging data beginning July 1 of this year, so coming up in just a few weeks. So SAO is in the process of getting these data sharing agreements, or DSAs, getting them in place with all of our local governments across the state. So you may have already received one from your local audit team. They might have reached out already. So while we have been using the DSAs with some of the state agencies, they're less common with local governments. But the good news is the DSA is not changing our existing practices on how we share or protect your data. It's really just putting it into a more formalized process. So, and in most cases, the DSAs will be good for 3 years, so we won't need to re-sign them each year. And then lastly, I wanted to let you know at this time, pretty much all of our audits are still being performed remotely or virtually. So we've been performing audits this way now since March of 2020. And we found a variety of ways to make it work, including using secure file data sharing sites like Kiteworks, and holding virtual meetings, sharing screens, things like that through Microsoft Teams or other platforms. So in some cases, it may work better for the auditor to pick up or check out records that are needed for audit, or we can perform some limited testing on site if needed. So when your audit's being scheduled, just encourage you, just work with your local auditor to figure out what's going to be the best approach for both you and for them for the audit. So that's all I have to share with you today. So I'm going to turn it over to Deborah so she can discuss OPEB.
Okay, can everyone hear me? Finally, something interesting here. Yes, I am the pensions and other post-employment benefits specialist for the office and also leases now. You had asked about OPEB, which has been around since 2009. So the question is, what in the heck is OPEB? Well, that's the acronym for Other Post-Employment Benefits. And when we say other, we mean other than retirement plans. You know, an income stream in retirement, that's the ultimate post-employment benefit. And then there's everything else. Healthcare benefits, things like the medical, dental, vision, hearing, all those things. And that's whether they're provided through a retirement plan or not. They're always valued separately. And there's other things like death benefits, disability, life, long-term care insurance. I even had a transit say, hey, we want to provide bus passes for all our retirees for the rest of their life. Is that OPEB? You bet it is. And so those are things, you know, when you only value them separately when they're provided separately from a retirement plan. So, slide, Megan. She's going to forward the slides for me. Okay, the question everybody wants to know is, do I provide OPEB? Well, if you're a participating employer in the state's Public Employees Benefits Board plan, what we call the PEB plan, then you do provide OPEB through that plan's explicit and implicit rate subsidies for the retirees. And maybe, you might if you provide OPEB through some other plan. If you're not sure, just ask me. You can email me, you can send a help desk question. Like I say, that's where the thing for the bus passes came up. Someone asked the question. So, slide. Now, your first question probably was, what? Am I providing OPEB through the PEB plan? What do you mean? First of all, the plan has a couple of rate subsidies. There's the explicit rate subsidy. You probably didn't know this, but there's a set dollar amount that retirees get their monthly premiums lowered by. And that's because the active, the employers pay that. And you can see, here's a little bit of the history on it. I took this from the actuary's report. For 2020, it was up to $183 a head. And incidentally, that's how much they get their monthly premiums reduced. That's not how much you pay. Now, how much do you pay? Go forward a slide, Megan. You're paying, what is it, $63.37 a head for your active employees. There's about a 3-to-1 ratio between actives and retirees in the PEB plan. So as part of your monthly premiums, your rate structure as an employer, you pay for those retirees. So that's an explicit rate subsidy. Now, there's also an implicit rate subsidy. That's what we call the blended premium rate. Retirees are included in the same cost pool as active employees. So that means everybody pays the same rate. I mean, normally you would expect retirees to pay more because, they use more health care. But everybody's in the same pool. And so that means that the rates for the active employees are implicitly subsidizing the rates for the retirees. And that implicit subsidy is also OPEB. And it's interesting, this implicit subsidy, it has to be included in the OPEB liability, even if those retirees are paying 100%. You know why? Because they're not paying 100% of their premiums. You're paying the rest of it. So now if the retirees happen to be rated separately from the active employees and they also paid 100%, then there would be no subsidy. Plans like AWC and WCIF, those are the plans in our state that do that. But I have a good illustration here. Go forward one, Megan. This is from the state actuary's evaluation of the PEB plan, and this is how they explain that implicit rate subsidy. Now, look at that big, the white area, that straight line going across there. You can see if you're paying as an employer about $550 a month, that's the premium rate, the blended rate for both actives and retirees. You can say, okay, paying the same amount for every person. And look at that gold line going up there, going up like that. That's the average active claims cost by age. And you can see when people are in their 20s, you're paying $550 a head a month. They're only using about 100, the occasional broken ankle when you're hang gliding, things like that. But as people get older, they use more of that. And you can see when they get up to be about 50, you're paying $550 a head, then they start using a little bit more than that. By the time they get up to almost 65, what is that, about $750 a month they're using? Who cares? It's all the same cost pool, right? You're paying $550 a head, you don't care. It's like, just because everybody's house doesn't burn down in 1 year, that's the way insurance pools work. Everybody pays the same. But what if those people are not working for you anymore? That's that blue triangle there. See, those retirees, they're paying $550 a head, but they're using more like $850. Well, who's paying the difference? The employers are. See, that's an implicit rate subsidy. So how do we value all this stuff? You can go to the next slide. Okay, so what in the heck is this OPEB liability we're talking about? It's an actuarial liability, first of all. It's the actuarial present value of projected benefit payments attributed to past employee service. And those of you with pension plans, you're looking at that going, well, wait a minute, that's the definition of a pension liability. Yeah, they're exactly the same concept. These actuarial liabilities are long-term liabilities. They have like an 80 to 100-year time horizon. Okay, these are long-term liabilities that are constantly remeasured. And unlike financial liabilities, things like, accounts payable, debt loans, all those things like that, OPEB liabilities and pensions, they have no specific due date, and you can't pay them off. You can't just say, okay, I'm going to give money to somebody and it goes away. That's not the way it works with actuarial liabilities. So go forward. So as it seems to come as a surprise to people, they go, what? I have to calculate this and report it on Schedule 9? Well, yeah, all of your accounting and financial reporting liabilities, all long-term liabilities go on Schedule 9. And I think sometimes people don't understand the importance of Schedule 9. It's not just the dollar amount that is on that schedule that's important to users of your financial statements. It's the type, it's the nature of the liability, because people want to be able to look at your liabilities and gauge your future cash flow needs. So you have to understand the nature of the liabilities on Schedule 9. Of course, different types of liabilities have different cash flow needs. Obviously, things like debt, that's got a specific due date. There's probably a schedule, a debt service schedule, so you know exactly what cash has to go out when. Some things are a little bit different. Think of compensated absences. There's really a non-specific due date on those, but you can look at that and pretty much go, okay, I know in the next 7-10 years, I'm probably going to liquidate so much of that. And then you get into pensions. Now, pension liability in this state, pensions are funded. So when people see your pension liability on Schedule 9, they're going to know, okay, about 80% of that's going to be liquidated through future plan earnings. And about 20% of that will be liquidated through contributions. In our state, that's pretty much the way it works with pensions on average. But now OPEB, see, that's an unfunded liability. People look at that, they go, oh, wow, 100% of that is going to have to be liquidated through future rate changes, benefit changes. So the nature of those liabilities are important. So go forward. So how do you get your OPEB liability? Now, the Office of the State Actuary has a tool for PEB. So that makes it easy. It's free, very easy to use. And all you have to do is go to the OSA website, which I thought we had a picture of that on this slide. We don't. Let's go forward and see. Maybe it's the next slide. We're looking at that. There it is. Okay. All you do now, go to their website. Incidentally, they are a department of the legislature. The Office of the State Actuary works for the legislature. So that's why it's leg.wa.gov. Go there and you see in the lower right-hand corner where it says OPEB Reports and Tools. If you click on that, you go to their OPEB webpage. Next slide. There it is. This is where you can read the evaluations for this plan. And there's a couple of tools. You need the PEB tool, not the LEF tool. LEF stands for Law Enforcement Officers and Firefighters. They have a separate plan. But you want the PEB tool. And all you're going to do is you're just going to click on that link and download that to your computer. So let's see. This is what it looks like when it opens up. It goes to this Intro and Data Inputs tab. And all you're going to do is look at those various age divisions, like 20 to 35, 36 to 46, 47 to 56. So for your active employees, you just put the number of active people, doesn't matter male or female, just the number and their average age. And the same thing if you have any retirees. And I'll tell you how to find out if you have retirees. And then you're also going to want to put in some number for annual covered payroll. They're on line 27. Keep in mind, these tools, they're for everyone in the state, not just cash basis entities. So there's a lot of information that GAAP entities need that you won't need, but the tool runs the same for everyone. So let's actually look at one filled out a little bit. I'll go forward a little here. I do want to give you a few tips. Download this tool to your computer before you try to use it. I get a lot of calls every year from very frustrated people. They're saying, I keep running it, I hit the calculate button and nothing happens. Well, that's because you're trying to make changes to the one that's on the actuary's website and you can't do that. So download it to your system, your computer. Only PEB member employers can use that PEB tool. Sometimes I have people say, well, my plan is PEB-like. No, I'm sorry. These tools are plan specific and year specific. You can't use a prior year to calculate your current year's liability. So always use the right tool. You need less than 100 total members to be able to use these tools. And I don't believe that's a problem for any of you. And by total members, I mean subscribers. So if you had someone, one of your employees has a spouse and 5 kids, that's still 1 subscriber. So I don't believe any of you will have any trouble. It will not work if you try to put in more than 100. You need to gather your data. Your retiree data comes from the healthcare authority through that FUSE system. I'll show you that screen. You enter the data into the cells, modify the cells, don't delete any of them. I had one person do that. She said, well, I didn't have anybody in that column, so I deleted everything. Well, she deleted the formula for calculation. And then you just click on the calculate button and everything comes up. So go to the next slide. Now, find out if you have retirees. You can't just call up the healthcare, anybody can't just call up the healthcare authority and go and say, hey, how many retirees do I have and what's their birth dates? No, that is confidential information. So the person in your organization who has access to this system, probably sign-on access, probably somebody in payroll or HR, because whenever you have someone new come, you've got to send the data to healthcare if there's changes in dependents and stuff like that. This is the system, it's called FUSE that they go through. So they would sign in and go to this page, and you're going to make a request to see that little, the little highlighted there, what does your question relate to? I think just do other on that. And in that white box, they can just say, I need a list of my retirees and their birth dates so I can calculate my OPEB liability. Just something simple like that, because this is a common request for this system, and they'll know exactly what you want. So go forward. And so here's an example where I just put some numbers in. I said they had, 5 actives in each column there, and I put in their average age. You can do it to the nearest 10th of the year if you want. And this group, they had a couple of retirees in the 65 to 70 bucket. They were average age is 68, and one in the 71 to 77. And then you just hit that calculate button there in the lower right-hand corner. Go forward, and it's going to flip to the GASB results tab. And you see on the bottom there where it says total OPEB liability ending. That's the number that you need to report on Schedule 9. That's all there is to it. You put your data in, hit calculate, but you do have to put something in that the annual covered payroll column. You could put $1 in there. That's the tool won't work without it. It does not affect the calculation of the liability, but it is something that's necessary for GAAP entities to report in required supplementary information though. So something has to be in there or it won't work. And that's all you need. That's the only thing you need out of this tool. So go forward one. Now, you're going to treat this just like pensions in the very first year. See what we did here, that 1,238,833. We started with 0 first year. Make that an addition so you end up with the right ending balance. And then in subsequent years, now that you have that balance, that'll be the beginning balance like it is with pensions up there. And when you run that tool, you'll know what you want for your ending balance. Just do an addition or reduction to end up with that right amount. You just keep doing that year after year. So go forward one more. Now, for note disclosures, we have a recommended note disclosures in our cash basis bars manual. Just follow that. So report on Schedule 9, you got your note disclosure. Go forward. I don't think we need anything else, do we? Any questions? And I've actually, if you need help with this, just call me up, get your data, we'll sit and we will run right through it. Only takes a few minutes. Do we have a question?
Yes, we do have some questions coming into the questions box. I'll just go ahead and list these in the order that they came in. And if anyone else has any questions, please send those into the question box and we can relay those here. First question is for Ginny's portion of the presentation. Can you point us to the state law for credit card policies that were mentioned?
Ginny? There was a question for you. Can you see Elisa?
Okay.
Elisa, can you repeat the question?
I can, and I'm wondering if maybe if we stop screen sharing,
Okay.
if maybe my video will come through better, hopefully.
Stop showing screen.
Okay, hopefully this works better. Can you point us to the state law for credit card policies that were mentioned? Actually, maybe I'll share this out here.
I apologize. I read lips and I don't have a captioning service. There isn't one with this, so I am relying on Megan to tell me what you're saying. And so I'm really sorry about that. I will see about getting you the RTW for the credit card policy, and I can email that to you.
Okay, thank you very much. Yeah, no problem at all.
And if I can add to that, there is information in the BARS manual as well that gives some guidance on things to include in their credit card policy. RCW might be cited in there. I can't remember offhand if it is, but it may be cited in there as well.
Okay, looks like we can help track down an answer here. Thank you. And then now we're going to Deborah's portion of the presentation. Just some extra clarification here, I think. Does PERS entitle people to OPEB?
If you are getting your health care through the state, yes.
Thank you. Next
And not only
one.
PERS, I want to say not only being a member of a state plan entitles you to, get healthcare after retirement. Any qualified plan, SEPs, IRAs, 401ks, anything that is a qualified plan under IRS regulations, you can stay on the state plan when you retire. You need to, of course, it's very easy if you're in, PERS, TERS, all those plans, because at the point you're retiring, you tell them, yeah, I want to stay on or not. It's a little bit more difficult if you're not in one of those state plans. You'll need to contact the Public Employees Benefits Board, the PEBB, the rules board, and say, okay, how do I do this? Because I know the hospitals, they have 401ks instead of being in the state. And so it's there are hoops to jump through, but yes, you are entitled to stay on in the PEBB plan when you retire. If you retire and truly retire, you can't just quit and walk away. But if you truly retire under a qualified plan, you can keep your health care.
All right, thank you. Does our office lease fall under GASB 87? So asking about the office lease.
Megan, or I can, yeah, probably.
Yeah.
I'll let you handle this.
Oh yeah, we have a leases webpage also. Not only we have an OPEB webpage and a leases webpage. Yeah, I mean, I don't see why it wouldn't. I would need to know more about the nature of the lease agreement, but generally most real estate leases do fall under GASB 87.
All right. Do we need to amend any prior audit years to include any OPEBs on Schedule 9?
I believe auditors were requesting, when they were auditing 2019 and found out it wasn't there, I think they were requesting that to be updated. But the best thing is to ask your audit team.
Okay, thank you. Got a lot of questions coming in here, which is great. Thanks, everyone. And do we need to amend any prior audit years to include any GASB 87 requirements?
No, GASB 87 for cash basis has not been implemented yet, so don't worry about that.
Great clarification. What if someone did not follow this process for the most recent annual report for OPEB reporting?
You'll be arrested, won't you? No, just go back and fix it. Now, the 2020 tool is out there on the website, the actuary's website. If you need the 2019 tool, I've got that. We can send that to you.
Right.
And if your audit has not started for 2020, you are able to go unlock your report and correct that 09. You will not need any permission to unlock it if your audit has not started yet.
Great. Can you give a little guidance on interlocal agreements between conservation districts? If we have a general interlocal agreement between CDs, not particular to a project, scope of work, budget, is that enough to invoice, pay each other? Or do we need to have a specific addendum that states the scope of work and budget? Would the guidance be different if the funding source is local, state, or federal? Let me know if you need me to repeat any of that.
If I understand the question correctly, they're really asking, is the interlocal agreement enough to pay the invoice, or do they need something more specific?
Yeah, they're asking if that's enough to invoice or pay each other.
I think it would
Or
depend on the terms of the interlocal agreement, the detail in there, you know, what is it for? Bottom line, they need to make sure that any expenditure of public funds is adequately supported, that they could show, you know, specifically what they're paying for, what the benefit was that was received or the services received. So I don't know that we can give, you know, a blanket, okay, just an interlocal agreement. It's going to come down to a case by case, you know, looking at what the details are in those interlocal agreements. Does anybody have anything to add to that? Okay.
Okay. And Sarah, let us know if that didn't answer your question. Feel free to raise your hand. We can call on you as well. Next one. I have heard that people could get PEBB after retirement, but since we are not in PEBB, how would we calculate it? Oh, I think you're muted, Deborah.
Yes, I'm good. Yeah, with this tool, this tool from OSA, that's how you calculate it.
Okay, next one. So if we offer a simple IRA plan, can former employees then sign up for PEBB and thus incur costs for the employer?
Now, you said former employees. People must retire from your organization under that. That is a qualified plan. They can't, but they must retire under the plan, not be working not be working for the state or you anymore. And they'll need to contact the PEBB rules board to see, you know, what kind of documentation they need to present. Yeah. And you can't just like quit now and 5 years later say, hey, you know, I'm going to retire. I'm going to see if I can get back in PEBB. No, that doesn't work. It's only at the time you retire that you can get that.
Okay, more great clarification there. Thank you. We'll take a breather in the questions. A great comment here. Fantastic presentations and information. Thank you. Okay, now back to the question. Oh no, just another comment here. We're not in PEBB, so we cannot use it.
No. Yeah, if you're not a PEBB employer, yeah, you're not getting healthcare from the state. Yeah, you can't. You could join now before you retire.
Okay, all right. Things have slowed down in the questions box, so if anyone has any more questions, please insert those there. Or if you'd rather ask your question verbally, you can raise your hand and we can call on you. But yeah, I think we'll give it a couple more minutes here. But yeah, I just want to thank you all for that wonderful presentation and all that information. And yeah, just continuing folks to encourage folks to enter their questions. Not every day that we have a great suite of state auditor's office employees on the same screen. All right, here's another question. Ooh, couple more coming in. Okay, so if I retire and the district does not participate in PEB, but we have a simple IRA, I can sign up for PEB and incur costs for the district?
No, you would have to, your district has to be a participating employer at the time you retire.
Okay,
You have to be in the plan to stay on the plan.
okay. Looks like some clarification on a question here. My question is, if people are in PERS and could get health care after retirement, is there any requirement that we calculate OPEB for our PERS members?
PERS membership is not really the issue. You know, people, I know that retirement and getting health care and retirement happen at the same time, but they're really two separate things. You always have to keep that in mind. So yeah, if you're in PERS and a member of PEB, it's quite easy at retirement because you just check the box saying, hey, notify the healthcare authority I'm staying on the plan. But if you're not, then it's a little bit more complicated. But yeah, you could be in PERS and not be in PEB. And then sorry, you don't, you know, that's the whole thing is, do I get to stay with it when I retire? So you've got to be in it first.
Okay. All right. Are we supposed to be collecting liability for current employees?
Yeah, that's the whole purpose with pension and OPEB. You don't want to wait till someone retires and then you slap this big liability on your financial statements. It accrues as people are working over the decades. You know, it builds up. So at the point when they do retire, the full amount that is due to them for the rest of their life should be reported in your financial statements. But you want that expense to occur as you're receiving the service from those people.
Great. Thank you so much for all of these clarifications. Great questions coming in. This is the time.
And it's my contact information. I don't know, do you guys get the slide deck or anything? Because yeah, we want everyone to see the contact information so they could just send us questions directly. We actually have three pension of OPEB specialists at our office. We get so many questions.
Okay, yeah. Yes, Shauna, can you clarify? I believe the slide deck will be shared on the Wade website. Is that right?
Yes, it sure will. And so will the recording of this presentation as well.
Great. Thank you, Shauna. Okay, another question here, needing some more clarification. So maybe I'm confused. Can people who are in PERS, but the district is not in PEB, get health care from the state after retiring? I think you might be muted there again, Deborah.
I'm not. I said no. Maybe I wasn't loud
there we
enough.
go. Okay. Yeah. Okay.
Yeah, I think to be very, very clear, if you're not already a member of PEB, when retirement happens, if the district isn't a PEB member, you can't go to PEB and get retiree health care. You have to be in the plan.
Teachers can, but nobody else can.
Okay, hopefully that was helpful. Again, feel free to raise your hand if you'd like to have more of a conversation. Great opportunity to do that.
Thanks so much, Alyssa. I'd just like to draw folks' attention to the chat box as well, where I've pushed out a few links and follow-up information provided by the State Auditor's Office staff. So take a look over there. That follow-up RCW around credit cards is in there, as well as a couple of additional links. So don't miss out on that information.
Great, thank you, Shauna. And here we have a thank you. I have been laboring under a misconception about retiree health care. So thank you very much for clarifying that. Okay, and it looks like we're coming up to 4 minutes to the lunch hour here. What do you think, Shauna? Wait and take a few more questions, or start to wrap up?
I think it's slowing down a bit. This is your last call, folks. We've got about another maybe 30 seconds or minute for your question to come in. Or if you want to think about the content that's been presented today for a little while, reach out to the state auditor's office and follow up. You're absolutely welcome to do that. Don't forget that help desk, bookmark that, and use it as often as you need to. But I also want to really thank our 4 state auditor's office staff for participating today, sharing all of that great information and their close partnership with the Conservation Commission in order to bring you this today. So it looks like maybe a couple more questions or another question coming in.
Yep, people taking advantage of these last few precious minutes here. How about a copier lease? There is an optional buyout. We have no intention of taking.
What kind of lease was that?
A copier.
So yeah, copiers. Will you own it at the end of the lease? See, that's not a lease, that's a purchase. That's what we used to call a capital lease. Capital leases don't exist anymore. That's just an installment sale. So a lease is only if you're not going to buy it in the end. Yeah, if you're not going to buy it, it's a lease.
Great. Okay, some more comments here. Thank you, that was great. And thank you for the great information. And one more question here. For GASB 87, what about IT subscriptions like our Zoom licenses or G Suite?
It's actually
If I said
GASB
that right.
96. That's GASB 96. The concepts are all the same.
Okay.
I mean, you can implement that now. You can include those in your leases now if you want. But yeah.
Great, thank you. And another thank you so much. A lot of appreciation here. We really do appreciate this.